Good morning, folks, and welcome to another episode with my man, Bob Iaccino. Today, we're going to talk about how to identify and trade trend lines. Now, we may talk about a little bit of kiss the trend line goodbye. Bobby's got, everyone has, Bobby, a different way of kind of doing things and identifying things. I know there's something that you do differently than other people may, so I'm kind of interested in seeing that. But before we get kind of into that, just give me a quick little 1-minute download on where you see the markets at the moment, and then we can move on to the actual educational piece of things.
Well, we still obviously have the geopolitical headwind, and it's based on crude oil's price and not much else.
Yeah.
There's something interesting going on in tech. Obviously, tech has been fading the grind of crude oil, but not the aggressive type of move we got today. The yields are part of it. You saw short end treasury yields pop. They've been kind of bobbing up and down, and today the 2-year popped by 7 basis points, the 5-year by 5, and the 10-year by 4. The 10-year yield at 4.37 is the highest it's been since exactly 1 month ago, March 27th.
Yep.
Those are headwinds for tech. Now, the reason that tech had been fading this a little bit is because of helium. Okay, helium is actually being held up because of the conflict. And helium means that the current inventory of product that chip makers have is going to sell at a higher price. Prices of chips have been rallying along with the price of energy and some of the price of the rare earths that are getting held up because China is not producing because their energy costs are higher.
Yeah.
So that's actually been the tailwind to tech. And I'm just figuring that out over the last few days. But when you get a pop like this, you don't have that sort of optimism of, by the way, I mean a pop in tensions and a pop in yields and a pop in crude oil above 100 on the US crude. You're not seeing that sort of, okay, it's going to end soon, but we've got higher prices for chips right now, so that profitability is going to go. Yeah. Earnings are about 600 billion in terms of the estimated earnings, higher than they've ever been. So everything looks good for stocks, but the worse the conflict gets, the further away the conflict gets to a resolution and the perspective of the stock buyers, the weaker that sort of narrative gets.
And here I thought helium was only good for balloons and messing around when I was a teenager. I'm going to share my chart real quick as we dive into some trend lines. Feel free to share yours as well. This is the trading view of like the automated trend line where it just kind of spews out a bunch of laser beams that it identifies, but then it kind of gets stopped. It kind of gets hit. There's one play here on MGM as I'm going to take this madness out as we dive into the topic where I love this trade. It broke to the upside. It broke my trend line that I drew, but then it came inside. And then how do you do that? But then it went outside again. Do I get in? Do I not get out? These are the types of questions we're going to answer today. But why do you love trend lines in general? And then we'll take a look at your charts and kind of go over to your mindset when you trade them.
Trend lines to me are, I think, from a trading perspective, are used incorrectly. Okay. And now you can use trend lines however you want. There's really nothing incorrect about the way somebody analyzes their data as long as it's consistent, right?
Yeah.
But people use trend lines as this is support and this is resistance, okay?
Yeah.
What we do is we use what's called a trade trend line. That's our term, and what it is it's a trend line that's generating a trade as opposed to just showing us a trend. This is Apple. The reason I don't have any trend lines drawn on here currently is because the design of trend lines generally means to show you a trend. Do I really need a line to show me that this was an uptrend?
No.
Right? Do I need a line to show me that this was a little downtrend? Do I need a line to show me that this is an uptrend? People look at it and they go, well, I want it for support and resistance. The way that trend lines are taught traditionally, if you look at Murphy's technical analysis book that's been around since the late 60s, right, is 3 points define a trend line. So in other words, you would look at maybe point 1, 2, and 3 and say, okay, there's a downtrend here, right?
Yeah.
But again, I say that this overall move is obvious. Like you can kind of look at this as a general area of where the next resistance point would be.
Yeah.
What we do instead is I use 2 points for a trend line. And I call them the defining point. The initiating point and the defining point. In other words, I initiate the trend line here and the trend line is defined by this point, okay? That's it. I don't need another trend line. What am I looking for? Well, I'm looking for a break of that trend to continue in the other direction, all right? So what I would be saying is, okay, once this trend line is broke, which is here, the next target, the very simple explanation of this trend line, the next target is the defining point, which is right there. That's going to be my next target for this broken trend line. You mentioned, I don't know if we were live when you mentioned it, but you mentioned I kissed the trend line goodbye. That's what's happening right now. Okay. The trend line has been broken here with a close above it. We came back below it. So the next thing I would do is redraw this trend line here. Why would I redraw it here? Because we had a break and a collapse, and the next day did not touch the trend line. So this is my new trend line trying to generate a trade. I don't do a trade just because a trend line is broken. Okay. I'll look for a continuation of it. We didn't get that here. Okay. Here's another one. We got a break of the trend line, but we got to close below. That's not a trade for me, right? The next day did not touch the trend line. So that means I have a new defining point of the trend line, and it's up here. Okay.
So let me quickly interrupt and just kind of make a point there. For you, if a trend line is broken, but it doesn't close and continue and it comes back inside, if the next couple of days, the candle does not touch that trend line again, you will redraw it. If it does touch it, then you know above it is bullish, below it is bearish. Not saying you'd enter a trade. However, your mindset is thinking that way. Do I have all of that correct? And
you have all of that correct. So as a trend line gets flatter, okay, the trend itself, meaning this downtrend here, is getting weaker. Okay. So here, before we had all this price action, I had one of my trend lines. I didn't have it in here, but it was here. Okay. This was a very strong downtrend. All right. Now I got to close above here. I got to pull back and a continuation. That's a long for me. Yeah. Okay. What's the target for me? The defining point of the original trend line, which is here. And there it's touched. Okay. So long here, defining point, profit taken. Now, what happens after that? This doesn't always happen, but it rolls over. So now I redraw this trend line. Okay. I have not had a trade since, because here's a close above, here's a move below, and then I've got a new trend line as soon as you move back below it, right? And people ask me all the time, why don't you have a new trend line here, right? Well, because this trend line continued to move. So if I draw a new trend line here, well, the next day I already broke above it. So this trend line continues to be the existing trend line. We can do it to the downside as well. I can find one on the downside pretty quickly. But now the current Apple trend line, in my view, I should have just left that where it was. The current Apple trend line, in my view, is right here.
Right.
Okay.
Okay, so above it. Yeah.
Right. Now, if I get a break above this trend line, my target is now the defining point, which would be right here. Okay. Now, let's say I get a break above the trend line and a break of the defining point. Where does my target become? It becomes the close or open of the initiating point, not the actual point, because these are hard to reach. They're often new all-time highs, right? So you go to the bodies of the candle that form the initiating point, not the actual initiating point. And so these trend lines give you natural targets and natural entry points, and you only need 2 points to draw them. Now, the problem to me with the 3-point trend line is, what do you do with it? So here would be a theoretical 3-point trend line. Okay, right here. You got 1, 2, and 3. Most people say, okay, this is resistance now. Did this really provide a good trade? And what's the target of that trade, right? Well, I'm going to sell against this trend line. Okay, fine. It closed above it. Are you still in it? I don't know. It's sold off there. Okay, let's say you stayed in it. That's pretty cool. Now, where's your target? I don't know. You have to basically look for vanilla support or resistance from a previous move to find a target. Whereas I, as always, in everything that I do, I want a concrete target, right? And this particular way of drawing trend lines gives me a concrete target. And we could pick any stock. Like, you can list off a stock, and I could probably find a trend line in there that's been either broken or redrawn, right? Now, people always say, do you go to the all-time low or the all-time high? I've done that in the past. So if we use this for an example, I can take this Apple chart and I can just pull it back and look for a low that did not have a rotation, and it'd probably be right here, okay? And I would draw a trend line there, say go from here to here, Okay, that was then broken. Here to here, that was then broken. Here to here, that was then broken. This is the current trend line that's in play to the downside. Well, what about all these? Well, I would continue to draw trend lines until this one was not cut through by another trend line. You could go all the way back to essentially inception of Apple and have all these trend lines drawn, but you're only looking at the two that are current for the trading right now. Is it an up move or is it a down move? Are we breaking out? This lower trend line looks good for a short because it also lines up with the 200-day to a certain degree, right? So if we get a close below that trend line, we're also getting a close below the 200-day moving average, right? That's factual. That's not, yes, we are likely going to do that. If we get a close below here, we are getting a close below the 200-day. Even if we continue to move higher, the 200 is going to continue to move up, right? So that's never going to change. So I push back on the trend lines need 3 points to be valid. That's what I push back on, because those 3 points, yes, it shows a trend, but I already know what the trend is visually. And I don't really like those support and resistance trades because they don't give me everything else I need for a trade.
Yeah. What do you do? Okay, so there's a couple of questions here for me. Trend lines, no matter what the time frame is, which we'll talk about here in a moment. If I see two connections, if I see two dots, 2 points, I kind of want to short on the third one for a scalp. I'm sure that's probably a reason that I don't have as much money as you do. What is wrong with that? You know what I mean? In terms of like, hey, if it had a reaction the second time, a third time, it's somewhat likely. I'm not saying it's going to go all the way down, but just in terms of scalps, like what's wrong with these type of strategies that you see traders often make mistakes?
Well, a couple of things. Number one, you don't have the rest of the trade. You say, I want to short there for a scalp. What else? What's the exact entry? Is it the trend line itself? What's the target? What's the stop? I could say the stop might be the high that broke the trend line if it got broken. The second thing is the 2 points establish the trend line. The third point is not proving that that trend line is reactionary. It's proving the trend line itself. So you would need the fourth point, because in traditional trend line education or trend line origination, the 3 points make the trend line. The third point is not the trade. It's the point that makes the trend line valid. It would be the fourth point that was the trade.
Yeah.
And I have seen people trade that. So if you're selling it, you're actually using my 2 point trend line, because before the third point is formed, you don't have a trend line yet.
See, I agree with you, and I've heard that as well. My concern is always that fourth one now has more orders being eaten up and is more likely to go through. Now I'm talking out on my behind. I have no stats to back that up. I'm just thinking in terms of whatever makes me feel smart at night. You know what I mean? So it's like, that's the reason for that. But let me pause on that moment, unless you have a comment on it, and ask you, what are your favorite time frames to draw trend lines on? Something we're going to talk to Richie about later today as well. But what about for you?
For me, it's weekly, daily, 4 hour, 60 minute in that order. That's my favorite thing to draw anything on. So for example, let's say that I have a rotation trade on the daily, which we can talk about that in the weeks to come. Yeah. Let's say I have a rotation trade on the daily. It's not really doing what I want it to do. I feel strongly about this trade. I might go down to a 1 hour chart and look for a trend line breakout that matches up with what I'm looking for on the daily, and get in a couple hours before the daily close, right? So I'll fine tune entries on a lower time frame to get into a trade on a higher time frame that I'm pretty confident is going to break. Yeah. So, and I do this on all patterns, right? It just means that if we get to the daily close and it hasn't made my trigger, I need to exit that. But usually when a 1 hour, I shouldn't say usually, I don't like to use that word. Oftentimes when a 1 hour trend line triggers or a 1 hour rotation zone triggers in the direction of where my daily trade needs to go, I can fine tune an entry there when the daily may be running away from me.
You have, I was actually looking at charts earlier to see if there were any patterns. I see a couple of double bottoms, which have become a favorite of mine to trade. And those of you that missed last week's session, that's what we talked about with Bob. But are there any current trades that you are looking at that have trend lines that you're a fan of? If not, chat, by the way, I see Ben. Good morning to you, buddy. You're welcome to post a couple of tickers, and let's see if there are any trend lines that we're able to kind of identify strictly for education and drawing purposes and not to tell you what to do. But are there any tickers that you have, Bob, yourself that you want to take a look at?
Ben is an old viewer from when the show was live before.
I do remember him and his bag holding.
Mm-hmm. So he finally got rid of that thing.
Did he? Oh, nice. Okay, good for you, Ben.
I think before the show went off live, and now that we're back live, I think he had gotten rid of that before, but he can correct me if I'm wrong.
He just didn't have your advice on what to do with it. That's what it was.
Oh, no, I was telling him, but he just wasn't listening. So we're long FDS right now, okay? I had a close below the trend line here and a slight continuation. Now, I already have a stop on this trade.
Oh, wait.
But if you can see by this one.
Sorry, give me 1 second.
Stop. What's that?
Sorry, legal's going to kill me. I forgot to say this because you said
something. Okay, no problem.
Yeah, disclaimer.
There we go.
Educational purposes only. Sorry we did this 16 minutes in, legal. I strictly and profusely apologize. I probably didn't say those 2 words properly, but there we go. Okay.
Yeah, we should always start with that. And you guys should always understand we're disclaiming. Okay, that should be a thing. So in this FTS, we're already long this off of this double bottom. This is a weekly double bottom. I'm just showing it to you on the daily chart. So we got the close here and we got in that trade. And then we got an immediate pullback. We got another close here. This is starting to get long in the tooth in terms of a double bottom, but it's a weekly one. So we give it more time. But I've already got a stop on this one. But here's something I don't like. I got a close below here and I got a continued move below here on the short side. Okay. Now, unless we get back up through this, this is acting as if it's going to be a kiss the trend line goodbye. So what does a kiss the trend line goodbye mean? I don't remember how to draw in StreamYard, so I'm just going to do it with my cursor. It means it comes up here, touches the trend line, and then rotates back down and extends. Okay. Now, to our newsletter subscribers, we've already moved this higher. Okay, I think it's basically to right here, but we haven't gotten to above our entry point yet. So it's already going to be a reduced risk trade, but I don't love that it's broken this trend line and continued lower and has not gotten back above it yet.
So when that happens, right, what do you do? Because you have one signal or one, trading strategy that says go long, stay long, your stop hasn't been hit. Then you may have another that says, hey, if this was a brand new trade, would you be short at the moment? I'm not saying that's where you're facing, but when you are facing these conflicting points and arguments, what do you do?
Well, so here's the funny part. They're not actually conflicting. And here's why. What is my target if I wanted to take this short trade? It's here. Okay. Yeah. Where is my stop for the double bottom? It's here.
Yeah.
Okay. So in theory, I could take this trade. Now, we've gone through the whole way that I do trades in the past, and we should probably do it again, right? I have a stop, I have a target, and then I figure out my position size, right? Yeah. So let's say that just for the sake of conversation, I have a 50 lot long in FactSet. I have 50 shares, right? Yeah. Now, maybe my thing tells me to do 75 shares short. No problem. I sell 75. That's covered 50 of the FactSet, right? I get down to my target here. Okay, let's say that FactSet goes like this, goes up, kisses it, and comes down here to my target. This is a weird tool. All right, comes down here to my target. I now sell 75. I'm sorry, buy back 75, right? Yeah. I've got 50 longing it. So I'm long 50. When I buy 75, or when I sell 75 of them, I've covered 50 of the longs and I'm short 25, right? Yeah. Here, I buy back 75. So now I'm long 50 again. Does that make sense?
Yeah.
So essentially what I've done is traded inside the other trade.
Yeah.
Okay? That's what I've done.
Yeah.
So, and I do that a lot, usually with daily charts, not with weeklies. This is a daily chart. This is a weekly trade. So this would probably be a smaller position than the other one based on the way that I look at risk. But that's what I do. And we call that trading inside the other trade because my stop is short of my target. So there's a possibility that I could win on the short trade, cover it, and then win on the long trade as well. Duration has a lot to do with people having different opinions. You'll be talking to a friend of yours that trades, and you're like, oh, I'm long Apple. Oh, I'm short Apple. Okay, let's see who's right. You both could be right. if you've got the entire trade planned out. If both of you have the entire trade planned out, because your long trade could be inside of here and his short trade could be inside of here, and you could both win. That's the part that's lost on a lot of active traders who haven't been trading for a long time. Duration and size have much more to do with who ends up being right, and you both could end up being right.
Yeah, especially, I couldn't agree more about the duration aspect of it as well. Because I remember a story you said a while back about you and another individual on TV doing an interview, you predicting, I think it might have been gold or something like that, that was going to do a certain thing.
British pound.
Yeah, and by the time you had gotten back, it had done something a little bit different at the present moment, and they tried to dog you for it, but you said, wait a minute, what I said happened.
I was right.
And after it happened, then what you said happened, and therefore...
we can like use this chart right here as an example. Pretend this is the British pound, okay? We're on the conversation here. Yeah. I said the pound is going to go down here. He said it's going to go up here, okay? Yeah. Let's say that the next move of the pound was this, okay? Yeah. This is when we came on TV next.
Yeah.
And they said, okay, Bob, here you said it was going to go down to here, but you were wrong. It's up here now. Like, no, I was right. It went here first, and then it went there, right? And it's just a matter of timing as to when we were actually on TV together again.
Yeah.
So duration has a lot to do with it.
Let's see what Ben's got. That goes along with my theory that trading isn't or doesn't have to be a zero-sum game. You know, it's so interesting you mentioned that, Ben, because I was literally 3 nights ago, I was thinking, is trading a zero-sum game? I'll be honest, it was midnight and I had just had a hot and spicy from McDonald's, so I wasn't exactly the best mindset or stomach sense. And in case you think I'm kidding, I may or may not still have the wrapper. Don't judge me for it. But I don't know if trading is a zero-sum game, but what I will say is what I continue to try to remind myself, Ben, and anyone else that's watching, is I don't need the whole doggone move. I don't need to have big whatever energy and know that I was right. I got the 40-point bagger. I got the 3x. It's like, nah, dude, I just need a big chicken and be able to pay some hot sauce and pay my bills. You know what I mean? And I think that's something that it's been a minute since I've traded again. Trade, took a break, got another job, and now I'm back in it. But that's something that I think is continuously something I need to remind myself of. It's just
this is the happiest day since the first day I met you that you hear you say that. I'm not even kidding. I'm like sitting here just basking in what you're saying. I'm like more of that warmth.
I mean, I even text you tickers now. I'm like, hey, did you see this ticker? Did you see that ticker?
It's just amazing because like I sit here all the time and you're midnight hot and spicy notwithstanding, that's an incredible piece of growth because, it's like what Ben says, it doesn't have to be a zero-sum game until the game ends. Yeah. When the game eventually ends, there will be a batch of winners and a batch of losers, but no, you're not always buying from someone who's selling at a loss, and you're not always selling from someone who's buying back a short at a loss. It's just not always the case. It's a rolling game, and that's why it doesn't have to be zero-sum in the context of our trading lives.
And something else that I did the other day is I literally traded 1% of my size because I wanted to trade something. When I was going to the gym, I didn't want to take my normal size or whatever. So I literally just traded 2 to 3% of my size just so I could feel like I was right. And that could be like, yeah, I was right. I literally just made $30. I'm happy. Or if I lost, I'm like, yeah, $30. We're good. Thankfully, $30. We're good. A lot of different situations for a lot of different people. But okay, we still have 6 minutes with you.
Again. What's that?
I said we've got about 6 minutes with you here still. Again, folks, if you have tickers that you want us to kind of chart, we can try to do that real quick. What do you think are, a lot of them you already stated, so I'm trying to see if there's any other good nuggets that you have. What are some mistakes that you see people make with these trendline strategies that you want to help them avoid?
Well, let me state this real quick first, sort of outside of the trend line box, although I did have trend lines on this particular chart before, and I'll put them back. I've been telling people on our show, our podcast, I've been telling people on news stories. I spoke yesterday to my friend Jim Bianco, and I put this theory past him. I spoke to Marta Norton from Empower. She was on our show, put this to her as well. I want to buy Tesla as a proxy for SpaceX. Okay. Mm-hmm. let's put a trend line in here and kind of go along with what my thesis was. And Jim Bianco said to me, is this because you think they're going to roll into one company? I said, well, no, I do think that, but this is not why I want to do that. By the way, you need to ignore all these instructions on here because these are from an old trade and I don't really need these on here anymore. But I said I want to buy Tesla as a proxy for SpaceX because I'm not going to be getting into the SpaceX IPO. It's just going to be too frantic and it's going to be run up and then it's going to come down. It's going to be too much volatility for my particular trading style, right? And when we got this close above the 200 that you see right here where my cursor is, this green candle, I'm going to zoom in a little bit. See this? When we got this close above the 200, it was also a close above this trend line here, right? But the 200 was in the way. Now you even see that this defining point, Tesla attempted to get to that defining point, didn't quite make it. The 200-day moving average is way too powerful. It trumps a lot of things, right?
Yeah.
I saw this close above the 200 here and I said, man, I want to get in this. This to me is going to be the trade for me over the next year or so. If somebody brought me on TV and said, what do you want to do for the rest of the year? I'd say I want to buy Tesla because I think it's going to go up in sympathy with SpaceX, right? I really do. I didn't do it because my method says when you get a breakout, you need to follow through and predictably a test, okay? I got the follow through the next morning and then the test failed and did this. And then earnings came and it fell even lower, right? This is an example, and then I need to redraw this trend line, right? This is an example of me being in this particular profession for 34 years, and I still want to do something I'm not supposed to do. I didn't do it. I held back, and I got rewarded again for following my process. There's been plenty of times where it's like, I should have done it. 34 years, and I still go, I should have just done it. And then I have to remind myself that I have to do the right thing to avoid situations like this. Right now, I would have been a losing trade and I would have been saying all the wrong things to myself. It's Tesla. It's going to come back. They're not going out of business. It was a position trade anyway. All these stupid things. When we all know that Tesla can make a new low. It's done it before. Do I need a trend line to show me this is a downtrend? No. But here's the trend line I'm watching. So now what I think I'm going to look at is not only a close above this 200, but a close above this defining point. So my theoretical buy point for Tesla will now be somewhere in here. Okay, it'll be somewhere where that bluish line is, because I want to be above the 200 and I want to be above this trend line. They match up in the same place, right? But if we were to get a trade here today, it wouldn't be above the 200. If we get a trade above the 200 in the next few days, it's going to have this defining point as resistance in my way. So now I need to close above them. And then I'm going to expect that this move is going to happen. And it's going to be somewhere in the range. It's going to get, I should say, it's going to get a tailwind in my view from the SpaceX IPO whenever that comes.
Gotcha. Well, I appreciate the insight. And yeah, this reminds me of different ways to play it, especially when earnings were happening in terms of sympathy plays and then different things like that as well.
By the way,
yeah,
crude continues like this, there's going to be Tesla buyers that are starting to come back in the market.
I haven't thought about that correlation. Typically, it's just the SPY and crude oil or USO that kind of have opposite reactions. But always a pleasure. Folks in the chat, Felix's session that typically is at 11:30 market time will be on Friday. So we're going to take a 30-minute break, but I did go ahead and post a link in the chat where we're going to talk to Richie Nasso about his favorite time frames to kind of chart and also enter trades and all the topics that come within it as well. Bobby, thank you so much for your time, man. I appreciate it.
Good to see you, man.
See you folks next week. Bye-bye.